Hey everybody, welcome to another episode of Smokin Bulls. Dave and Tyler here again to chat with you guys about our most recent Market Insights newsletter that just came out in September for 2025. It's put out by Dr. Jim Thorne, who is the Chief Market Strategist for Wellington-Altus. Pretty interesting newsletter. We've of course read it. It's went out to all of our clients and some of our contacts. So if you've got it in your email inbox, encourage you to read it. He talks a little bit at the very start about peace dividend and the fact that it's setting up to be a bull market. I mean, we've been in a bull market for feels like a year now. He's saying it's going to continue.
Yeah, I think for following his market insights as we've gone along from the start of the year, this ties into that because, if people are worried about the political environment we're in or the tariffs, all these issues, there's money on the sideline. And part of it was, we had the pullback in March, April, and that threw a lot of people off thinking that this was, the end of the world again, and have not put their money back in. And now people are piling back in because, times look good, but they're still scary. So, there's still this belief that we're going into a correction at some point. I mean, as Dr. Thorne said many times, we're just going to have those 10 to 20% corrections. You have them every year anyways. So overall, though, he is very bullish on the longer term. He believes that, the deregulation, that diplomacy is going to win, and that there's a pretty good tailwind on this secular bull market.
Yeah, he ties it into the early 90s. And if anybody's been around since back then, you went through a pretty strong bull market for that decade with innovation happening around the internet being developed. And now he's kind of likening that to, the development of AI, artificial intelligence. We're really early innings of that. And even, talking cryptocurrency, Bitcoin and other cryptocurrencies. So he's saying these two areas that are very fledgling are going to create, the future of the next 10 years of market growth. So there's pullbacks in other areas, more traditional areas. So he's talking, sometimes about deflationary effects of falling oil prices, for example, but the effects of technology growth is kind of offsetting that. So he's saying position yourself correctly and be ready for a ride, a bull market in that technology side.
Yep. I mean, in your reference to the 90s, I mean, we all remember the dot-com bubble, things like that. I mean, when it was rising, there was lots of major pullbacks before it had a really good wipeout there. So if you're thinking that AI type things are overvalued, well, compared to what in any given moment, they could be overvalued and you're going to get a pullback. Then everybody sees an opportunity and then it grows again. So it's just in that growth cycle that we're going to see it run pretty hard, and there's always going to be pullbacks. So I think it's a good call on where he's going with this.
Yeah, I like that he notes, and it is in the article, he quite often says, think 5 to 6 quarters out. Don't think about what's happening today. Don't get caught up in the news cycle, the market cycle that's happening on a day-to-day, even hour-by-hour basis. He's like, you'll lose every time if you're trying to trade or base your investment portfolio off that. I always think 5 to 6 quarters into the future, which is a year and a half forward-looking. So if you're positioned for that year and a half out, you're going to do fine.
Well, and let's talk about that a bit more when it comes to Federal Reserve and policy shifts and things of that nature. I mean, he's been at this for a year, harping that the Fed's late, and that the effect of what the Fed does takes a year and a half to show it. So, I think he's wanted the Fed to adjust, and I think part of what he's got in there about the Fed too is that there's whether the Fed's losing its independence, over treasury needs. Basically, the American government, like a lot of Western governments, they're in fiscal peril. I mean, it's not the end of the world, but it's getting tight where they need some market forces and they need some intervention in order to stack it in a way that they're going to be able to continue on and afford their social programs and have pay their debt down. Because as we know, especially Canada, US, I mean, a lot of the expense is now covering your deficit, paying interest costs. So if you can make the interest rates go down, then your interest costs go down. Your costs go down overall. Sorry, I jumped back a little bit on the kind of the AI situation. I mean, one of the big things that's happened mostly in the States is that's what's keeping their GDP up, is the amount of investment going that, whereas Canada has not felt that same thing. We're flat or negative now. The U.S. is quite positive overall. Now, where that sets up, whether we have a bit of a economic turndown or not, is still yet to be seen. But I think Canada is going to feel the pinch a little bit harder here in the next bit compared to the States.
Mm-hmm. Yeah, so it's an interesting newsletter or market insight again from Dr. Thorne. It always is. Take a look at it. It's on our website. It's went out to your email inboxes. And if you have any questions, please reach out to us and follow us on our socials. Thanks for watching.